commerce teacher. In this video, I will teach you CEC first year accountancy topic, accounting principles and accounting concepts. Students, these are the basic accounting concepts which are very important to know about the concepts. They are very helpful in understanding accounting. So before that, let me tell you one thing. The meaning of concept. Concept means assumption or condition. To get some results, we will apply some conditions. Similarly, in accountancy also, we need to follow or apply some conditions, or we need to assume, or we can go to use some assumptions to apply the accounting principles in recording the business transactions in the books of accounts. See, there are some of the important or basic accounting concepts. So those are, first one, business entity concept. Second, dual aspect concept. Third, going concern concept. Fourth, money measurement concept. Fifth, cost concept. Sixth, accounting period concept. So these are the some of the basic accounting concepts. Let me explain you the first concept, business entity concept. As per this concept, we have to treat the business organization and the owner of the business separately, or we can go to treat the business organization separate from the owner or stakeholders of the business who contribute the capital to the business organization. This concept helps us to record the business organization transactions separately from the private transactions of the owners. Okay, students. So here we treat the business organization as a separate entity, separate person. Okay, here we can say as a person. Business is separate and owner of the business is separate. And here that is called business entity concept. So I hope you understood the main meaning of the business entity concept. Business entity concept means nothing but we treat the owner of the business is separate from the business organization. Why we have to treat separate the owner from the business organization? Because the private transactions of the owner are recorded separately from the transactions of business organization. Then only we come to know the true or actual profits of the business organization. Otherwise, we want to find the exact or accurate or true profits of the or real profits of the organization. So here business entity concept. Next, come to second one, dual aspect concept. Here dual aspect concept. It is the concept based on which the double entry system of bookkeeping is come into existence. So here dual aspect concept. As per this concept, we need to assume that every business transaction may have two aspects. One aspect is receiving benefit aspect and another aspect is that giving benefit aspect. So it is the only assumption. So it is we have to think, we have to assume that every business transaction will have two aspects. One aspect will be giving a benefit aspect. Another aspect is that receiving benefit aspect. For example, if you purchase a machinery, so the machinery is the receiving benefit aspect for the business organization, and you are paying the cost or the price of the machinery. So then that is giving a benefit. So with this, what we can understand, as per dual aspect concept, every business transaction will have two aspects. One is receiving benefit aspect and another is giving benefit aspect. Based on this concept, the double entry bookkeeping system is emerged. Okay, now come to third one, that is going concern concept. Okay, so third one, going concern concept. So as per this concept, we need to assume that the business organization will continue for a long period unless it enters into the state of liquidation. What does it mean? Here we start any business with the assumption that the business will continue for longer period of time. Okay, so only it is our assumption. When we start the business, we think that the business will continue for longer period of time. That is the assumption. Okay, for closing tomorrow, we won't start the shop business today. Okay, so here going concern concept means it is a concept. As per this concept, we need to assume that the business organization will continue for a long period of time. Okay, students, and come to next one, money measurement concept. As per this concept, in the business organization, we have to record those transactions which can be measured in terms of money, and we should not record the transactions which we cannot measure in terms of money. Okay, students, here money measurement concept. So as per this concept, in the business organization, those business transactions are recorded in the books of accounts which can be measured in terms of money, and those transactions which cannot be recorded in the books of accounts, which cannot be measured in terms of money. Example, here if you purchase a machinery for rupees 10,000, it is the cost of the machinery is measured in terms of money, that is in rupees 10,000. Okay, this transaction can be entered in the books of accounts, but the machinery is broke down. So it also an event happened in the business. It is also one transaction. It is also one event that happened in the business, but this event cannot be recorded in the books of accounts because that cannot be measured in terms of money. Just it is a information, given information. For that we won't write any entry in the books of accounts. Okay, students. So here this as per this concept, we can go to record the business transactions which can be measured in terms of money in the books of accounts. And come to next one, cost concept. So as per this concept, we have to record the cost or the price of the assets in the books of accounts. The actual price, the actual price that we paid to acquire assets, that information should be entered in the books of accounts, and this information may be used for subsequent accounting process. Okay students, here cost to concept. As per cost to concept, we should record the actual price that we paid to acquire an asset, and this information should be used in the future or in the subsequent accounting events, accounting transactions, accounting entries. Okay students, right. Come to next one. Accounting period concept. So here, as per this concept, we need to prepare some financial statements on regular intervals. Here, generally, we prepare financial statements to know the performance of the business organization on a particular period of time. So, here, an accounting period consists of 12 months. Generally, accounting period consists of 12 months. It begins on 1st April and ends on 31st March. Similarly, you see the calendar year which starts on 1st January and ends on 31st December. In the same way, here accounting period also consists of 12 months. So, here in most of the countries, the accounting period begins on 1st April and ends on 31st March. Whereas in some countries, accounting period may begin on 1st January and ends on 31st March. Okay, so on 31st December. On 31st December, the business organization should prepare accounting statements or financial statement. Financial statements include trading account, profit and loss account, and balance sheet. We prepare the profit and loss account to know the performance of the business organization, to know the net results of the business operations. Okay, and we prepare the balance sheet to know the financial position of the business organization. So these are the important basic accounting concepts which we use in our accounting process. Okay students, what are those important accounting concepts? One is business entity concept, second dual aspect concept, third going concern concept, fourth money measurement concept, and fifth cost concept, and sixth accounting period concept. I hope students you understood all the important accounting concepts. Okay, thank you for watching this video.